Good morning, everyone. Welcome if you're on the Zoom or if you're on YouTube. Welcome to another live trading session. Remember that if you have peers that you'd like me to go through once I've completed my official watch list, and I can do so for you guys. If you're on Zoom, then feel free to sorry about that. I was actually getting back on loop. All right, so as I was saying, that if you're on Zoom and you want to ask a question directly or you want me to look at a pair for you, feel free to send that in the chat and I'll just open up your line so you can ask a question directly. Or if you have the pair, I can look at it for you and give you my opinion and feedback. All right, for those on YouTube, you can utilize the chat and we'll have a look at that for you as well. All right, as I've said, all my live trades and all the pairs that I look at, all the forecasts and projections that I make, I'll share them with the members in my exclusive trading room on Telegram. So if you want access to that, you can always reach out to me and you can gain access there. All right, so first off, we want to start with USD CAD. All right, so first off, we're going to be looking at USD CAD. Now, yesterday, when we look at this market, we were pretty much where we are right now, where I was saying that based on the market's movement, we would have identified this as the first impulsive move up out of the new uptrend that is being created. What we saw as well is that this movement right in here, as the market came out of this retracement here and then made another impulse to the upside, what we saw is that it would be very hard for us to count this at this stage as an impulse, right? So what we were looking at this as an A wave corrective. This would become a B wave corrective. And what we're looking at is for a C wave. And that C wave correction, we were targeting at the same level as wave A, which was about 126.83, right? At that time, it said that we needed to see the market close firmly below this low here, right? To give us any indication of selling pressure, right? Or selling momentum, right? So we got that movement down there, and all we're simply doing now is to wait and see how the market would react today. So we're still targeting 126. If you took a position to sell yesterday based on my analysis, then that position would be active now. What we would have as our invalidated level would be right at the top here. So that simply means that once the market gets back over this zone, then we'd start to look for buying opportunities. But for now, the structure is still bearish, and that's simply what we'll be looking at for the market to continue its movement down here. All right, so not much change within the market since we looked at it yesterday. When we look at, next up, we're looking at Euro USD. And again, we were looking at the market to make its move all the way down to the first target would have been the 0.618 zone of the higher time frame, right? So what we looked at yesterday, we're saying again that this structure here will be wave 1, this level being 2, and what we saw was the market making a extension out of wave 3, right? So we could look at it to say this is 1, 2, market created wave 3, 4, and 5. So what I had suggested is to say the first thing we want to do is to observe and see how this overall market played out in terms of this leg of the extension or this 5-wave cycle that we were seeing. Is it wave 1 where wave 3 is extending, or is this to be wave 3? At this current stage, we don't know as yet, but all we can simply do is to highlight this low. And this low here would simply be utilized as our invalidation point. And why am I using this level here? It's simple. If this is to be wave 3, then we understand that wave 4 cannot enter into the territory of wave 1. Otherwise, then we would have to simply label this zone as wave 3 extending with a first wave out of that extension. The next thing I wanted to look at was to see exactly how the market retraced out of this zone. And generally, we would get a retracement from wave 3 between 23% and 38.2%. And what we're seeing is that we got the smaller retracement. So at this stage, I could, based on this and the rules of Elliott wave and the guidelines, I could actually label this level as wave 3, right? So we would have 1, 2, 3, because wave 4 retraced into the 23.6 zone. Right? Generally, it would go between 23.6 and 38.2. We have the latter. We have the retracement into the 23.6 zone. So what I'll be simply doing now is to highlight from here. Now that I have wave 3 and 4, at this current stage, we're going to say that we have both wave 3 and 4. So what we're looking at now is for wave 5 to finish off. And we'll be looking at the overall target down here, which is what we had at 118.80 to complete the entire move of the structure, right? And to gain some other perspective, we can look at wave 2, connect wave 2 to wave 4 and extend that to wave 3. And if we do that, then we find ourselves with a channel in which to work, where we can find the market making its move here. We have 1, 2, 3, 4. We can find ourselves within this channel here to give us wave 5, right? If the market breaks out of that channel, then we can simply extend the target to take in the level from wave 1. But for now, this is simply what we are working with, to see just exactly how this market would retrace. So we were bearish yesterday. We are still bearish today as well. Right? And all we're simply doing is looking for further decline. So our area of interest now would be to see exactly how the market reacts in this zone. If we continue to get bullish price action, or bullish price action comes back into the market, we'd want to see just how the market reacts in this zone. right? And then we can look for continuation lower. So this becomes our area of interest for us now. So our target would be extended for the market to continue lower, right? And the first area would be at about 1920. So that's the first point that we would be targeting. And then from there, we can monitor price action to see if we will actually get it all the way down to our ideal target of 1880. And how did we arrive at this target? Simple. Wave A equal wave C, right? And that's from the parallel line, that the channel that we have from a higher time frame. So when we look at it from the 4-hour time frame, remember I said that this is a trade that we have been in for a very long time. We got in this trade around the 8th of January or so, somewhere around here. We got in this trade, and it's a trade that we have been monitoring right through. Right, so wave C equal wave A. And this is within the overall channel that we'll be looking at for that market to finish off its extension down here, the correction. Right, but for now, we're simply just waiting and watching to see how price is reacting. From the 1-hour time frame, all we're doing is just monitoring this price action here. Right, so we have wave 1, 2, 3, 4, and now waiting for wave 5 to finish off. Thing we want to be looking at is pound USD. Again, most of the pairs that we're looking at, we had confirmation yesterday. And for this, we're saying that we are looking as well for this overall market to decline, right? And from the higher time frame, looking at it from a 4-hour perspective, know that this might look a bit crowded for you guys. So let me just hide a lot of these. All right, but what we're looking at is that the market finished off the overall move with an ending diagonal in here, taking shape in here. Don't watch the join either. All right, but this movement here was an ending diagonal starting from this high. And out of that, would have been expecting the market to change its overall direction. We're already getting that now with a break of this low. If you want to look as well, this would be the top of the market. Here we would have our market potential anchor that's holding this trend to the upside. This is our trend anchor. So this ideally is the low that we want to take out. If we take out this low, then we would have a confirm or a stronger position to say that this market is heading downwards or the overall trend is changing, right? So as it stands now, we are still in the uptrend here for pound USD, and the market is holding firm. But we are starting to see the market creating a new movement where it's creating now a trend to the downside. We don't have a confirmed trend as yet because we only have what is considered as a low and another lower low. All right, we need the market to take out this low to confirm it as an active trend. And in doing so, if we look by taking out this low, we are essentially taking out what? This one right here. And as I said, this level is the market's trend anchor. This is the level that is holding the uptrend in place. So ideally, that's what we want to see from a higher time frame. So when we apply back our joint, this is why that we are looking at the market getting out of this level where we can say that we have a confirmation to start selling this trade. Taking it back down to the 1 hour time frame to have a closer look at what is taking place there. What we find is that this low here that I just showed you was what, wave 4 of that ending diagonal. If we look at the market here, this would have been the top of the market. Your first pivot low would have been right here to give you your potential anchor from the 1 hour perspective. This being your pivot high, and this level here will become your trend anchor. Market staying within that level there. So what you have now is this zone. It's also our little area of interest. And that's all we want to see. We want to see the market getting out of this zone. So far, we have completed 2 waves out of the correction. We have A wave, we have the B wave. And all we're simply doing now is looking for that C wave. C wave generally unfolds in a 5-wave degree, right? And if we look at the market here, we can say we potentially have wave 1, wave 2, wave 3, 4, 5. And this gave us the first wave of a smaller degree or a mini wet wave. And we have wave 2. Now we have a smaller wave 1 coming down. This level here being wave 2. And all we're doing now is what? Looking for wave 3 and 4 and 5 to finish off. So ideally, what we want to be doing at this stage is monitoring these 2 levels here. This is our wave 2, and this structure here becomes our invalidation point. We do not want to see the market getting back above this high. Otherwise, we would have invalidated our account and we'd be looking for something else out of the market. But certainly, we would not be steadfast on a bearish market environment should we get back above this level. So we now have 2 areas for us to be looking at. So it's all about monitoring the price action throughout this zone. We have this as a minor wave 1. And if we should take any form of retracement from this level to the lows here, we're seeing where the market came right in at about the 61.8 zone with this structure here. And now we saw where we are getting price falling off. So let's observe this today to see exactly how the market plays out. So far, so good though, based on the analysis that we did and the forecast that we did yesterday, right? So we're still holding a short bias on this trade, still holding our confirmed area, and we're targeting these lows. First target point for us would actually be here at the 1618 extension. So this is what we want to see for Euro USD, for Pound USD, I should say, sorry. All right, for the market to break and take out this low at 136. So once we take out the lows at 136, then we should be comfortable in terms of having a higher probability of the market continuing lower, potentially to 135 or even to the 134 area, where we are actually looking at for this wave 3. So we have wave 1, wave 2. We're looking at wave 3 to potentially come in at the 2618 extension. So we are either looking at these 2 zones here for wave 3 or here. So this is the first target point, but ideally we want to see the market down here. But we are just looking to get confirmation once price breaks this low. So let's monitor this throughout the day and into the week to see exactly how this trade would pan out. Next on the list, we're looking at pound yen. Now, yesterday, I put in this trade while we were on the live, and I was sharing with you guys as well that we had a ending diagonal similarly to what we saw on pound USD, where the market created, in this case, a zigzag pattern to complete the ending diagonal here. What I said to you guys is that even though the created a new high here, this was not an impulsive move, but a B wave out of the correction. This is where the market ended its overall uptrend. So the market ended its uptrend right in this zone. Now, as I was saying, is once we saw the market started to decline, we were able to highlight this as wave A. The market created a new high, and we are able to highlight that as wave B. Now, what we're simply looking at is wave C to take shape. And wave C generally unfolds, as I said, in 5 waves. We have now wave 1, 1, 2, 3, 4, 5. Wave 1, we have the 3-wave correction, right? A, B, C, A, B, C, right in this area to complete wave 2. And all we're simply doing that from this point forward is monitoring this overall price action to see exactly where we would fall, right? And I said we needed to take out the lows that the market created here yesterday. Once we get back below the lows of wave A, then we would be good. At that time, we were up here. Price was about within this zone here when we were looking at this market yesterday, right? And I said, once we get beneath this low, then we can start looking for selling action. Market pushed down into that zone. We got some retracement into the market where we had some bullish pressure emerging in the market, but ultimately we are short again. The market is still moving lower. So we are just simply monitoring this. Our first target point is 142.40, and we're looking for that level for wave 3, and then potentially for the market to finish off at the 2618 extension to give us wave 5. So as it is now, this trade is still we are still holding on to a selling position, and we're maintaining our short bias, and we'll just simply monitor this trade as it progresses, right? But we are still short for pound yen. So not much movement out of the market today where the yen is concerned, right? But we are simply monitoring this to see exactly how the market would react. Ideally, we're looking for the first movement out of the market to come here. And if we look at it from a higher perspective, we are ideally anticipating a much larger sell-off out of pound yen, because what we have done is to complete, and again, don't mind the confusion here with all of my labelings on the chart, right? But when we look at it from a larger perspective, we're seeing that we have ideally completed a grand cycle, right? We have completed a higher degree. So ideally, we may find price revisiting back these zones down here at 137. And if that's indeed the case, then we are in for some very high or good return out of this trade, right? So we will simply monitor the market as it progresses, right? And then we'll update it accordingly, right? But for now, we're still holding a short bias for pound yen. Next, we're looking at dollar yen. And yesterday, I said that we were to move all our stop loss for those who were in this trade with me from the start. And if you're in the trading room, then you should be in this trade from the start, where we got in that overall move out of these lows, where we identified where the market completed wave 2 of a larger cycle, right? And once we broke out of that downtrend, and I believe I shared this analysis in the free trading group as well as shared this as an educational view in the library. So you should have these information in which to work from as well and plot your way as the market moves. Let us hide this for a bit. So as I was saying, and initially, we had the market completed this first cycle up here. First move that we got was from this low when the market break here. I said, start looking to buy. And we got in out of this retracement. Once the market got back above this level here, we were in that overall trade. Collected some profits out of the market as it came here, stayed out and wait for this correction to complete. And I shared yesterday how the market created this ABC correction. There's also an educational video on this on IG, on the IG page. So you guys can look at that as well to see exactly how the wave count turned out in this area. Right? From there, we highlighted this as our low and wave 2. Then we are looking now for the market to complete wave 3. We have that being completed. We have 1, 2, you have a smaller 1, 2, 3, 4, 5 to give you wave 3. Here would be wave 4. And what we're simply looking at now is for the market to complete wave 5. Now, this level, what makes this pair so interesting is that right at this stage here, this could actually be wave 5. And here we have wave A, B, and the market completing at C, similarly to the irregular pattern that we saw on the pound yen and pound USD as well. So both of those scenarios are still highly active for this for this trade. So what we want to be monitoring as the market progresses, we simply want to be observing the price action here. What would become our confirmation level if we are to indeed look to sell this? We would need to see the market take out the lows from this level, from wave 4. So we would need to get the market to break out of this structure here. So right at this point, for us to look at any selling opportunity, would need the market to come down here, break this low. If we break, we can start the price to revisit these areas. Ideally, overall structure is still bullish, experiencing now some minor corrections taking place, right? What we can look at is that from wave 4 going into wave 5, we can potentially say that we have, and I just want to highlight this, that we have a minor wave 1, wave 2, A, B, C to give you wave 3, A, B, C potentially to give you wave 4, and then we're looking at wave 5 to get higher. And in this, we're looking at an ending diagonal that could be taking shape as well, right? So now our overall area of interest still remains within these zones. So this area, if that's indeed an ending diagonal, that's taking shape, and we do not want to see the market getting below wave 2 or wave 2 level. All right, so if we should label that, again, we'd have wave 1. This area would be wave 2. Here we would have wave 3. That's what we have so far. We don't know where the rest of them are going to come in place. Let's just put it exactly at that point. All right, so this is A, B, C. We give you wave 3. And now we're simply looking at now is to see exactly how this structure is going to unfold. If we get above here, let me just draw a channel from this low and connect these highs. And we'll be targeting anywhere up here at about 105.50. They're about to finish off wave 5, right? But for now, if you're in this trade, I would say I gave the suggestion yesterday to move your stop loss into this area. I'll highlight there as stop loss. Right, move your stop loss there. If you're not in the trade, I would not advise taking a long position at this stage, because the market could easily turn and go bearish to complete the correction of the higher degree. Right, so this is one that we definitely need to take precautions with, because as I said, we could very well find ourselves pushing lower. All right, next thing we want to be looking at is gold. And before I get started here, I want to explain this or to break it down from the higher time frame first. Now, looking at the market from the daily time frame, and if you guys are a part of the trading room, the exclusive trading room, you would have received proper analysis from this from back as November. We were monitoring this trade out of the entire decline, where we were able to make some good profits out of this as the market progressed lower, right? So what we're ideally looking at is for the market to correct into the 38.2 zone, right? Of the larger move coming in out of these lows here. From there, we saw where the market created this low here at 1764 and then pushed higher. And what I read that as, because we were able to count a 5-wave move up, we were able to highlight that as potentially wave 1 of the new cycle, right? Of that 5th wave that should be coming in, right? The market started to correct. We have the A wave correction, B wave, and we're looking for C wave. Should the market get below this low here and take out the lows of 1764, then I can no longer label here as wave 1, but I would simply have to look at it as an X wave, and the wave 4 would still be correcting. Right? That being said, if we look at it from the 4-hour time frame, we're able to identify where the market would have completed 5-wave moves down. Now, once you see the market give you a 5-wave impulsive move, right, the first thing we have to look at is that that move is not over, right? Anytime the market gives you a 5-wave move lower, we understand that there is more to come, and the movement lower is not over, because the market never corrects in 5 waves. So what we're looking at now is 1, 2, 3, 4, 5 wave down. We have to label that as wave A. The market made a 3-wave correction up in 1, 2, 3. We're looking at that now as wave B. And what we want to see now is the market creating wave C. And wave C generally unfolds in what? 5 waves. We have 1, 2. We're looking now for wave 3, 4, and 5. Now, based on the market's correction, we found that from this level here, we took the Fibonacci retracement from that level into where the market created wave A. We found that the market retraced right into the 50% zone to give us wave B. Now, using that information, we can say that if the market retraces into that 50% level there to give us wave B, what we can do is to take up the extension from that point. To say that we are looking for the price to enter into the 0.618 territory to give us wave C. Now that's our first target point based on the guideline for the market to enter into that territory. So if we get price into this level, we can label it as wave C for now. And then we would be looking to see a 5-wave impulse up to create wave 1 of the smaller degree. If the market fails to give us this movement up to switch to a bullish scenario, then we can therefore look for the market to potentially finish off its overall move lower and break that low. So all of this is just simple speculations now. We still have to wait to see how this overall structure will develop. As it stands now, we're able to identify one impulsive wave down. We have wave 2 in here, and we have a mini wave 1, 2, 3, 4, and we're simply looking at 5. Take that now to the 1 hour time frame so we can break it down some more. All right, initially, now I had shared some previous analysis in the group, and those analysis, we had them here as the 5-wave move up to give us wave 1. We're looking at this to be 2, and we got this move up where we're looking at for 3. The market invalidated this entire structure. So that's how we were able to identify that all of this move was still part of a larger correction, or that B-wave correction of the market that took place here, of the lows of the market down there. So from this stage here, we can highlight to see just how this overall price action is progressing. We have this first impulse move down, which is wave 1. We can count a correctional move up to give us wave 2, where we have A, B, and A, B, C to give us wave 2. Out of that, we have a mini wave 1, 2, and the market completed wave 3 here. Wave 4, based on Elliott wave and the Fibonacci retracement, wave 4 generally retraces between to the 38.2 or the 23.6. In this case, we have the market retracing into the 38.2 zone. So from there, we can label this now as wave 4. And all we're simply doing is what? Looking for wave 5 to take place. And let's see if wave 5 would actually unfold in a 5-wave move down. So what we can look at now is to say that this level here potentially is now our invalidation point. And where are we targeting now? We're actually targeting these lows based on the channel. If we are to look, we're looking at wave 1, 2, 3, 4, 5 to finish off at the end of this channel. And if that's the case, then we can look to execute a trade should the market break this low. Right, and that's still our area of interest. But now as price was building up closer into that point, we can now look at if the market should break out of this zone, then we can potentially look for selling opportunities. And we can look to sell at this stage here, keep our stop loss immediately at this high, and look to target these lows. right? And that's ultimately what we're looking at. Wave A equal wave C, so we can target right at that low for wave A. And we'll simply monitor trade as it progresses. So ultimately, this is what we'll be looking at. Let me just share this one as an idea in the trading room as well. Now I will monitor this trade as the market progresses. If we do get activated, we will simply start to monitor it based on how the market reacts within this area. I will update and tell you guys whether or not this is still something valid for us to hold on to, or if we should just simply ignore it. For USD, for EuroCAD, again, price is moving pretty much as anticipated. Yesterday, we were right into this area, and we're experiencing some retracement out of the market. I said to you guys was that there are two things that we want to be looking at. We could very well find that this movement down here, because it completed a 5-wave impulsive move lower, we could either look at it as wave 3 of this larger degree, or it was wave 1 and we're looking at a wave 3 expansion. Now, what did I use to determine that this was wave 3? The market from wave 2 to where wave 3 ended should retrace to about 38.2% for wave 4. And we got that retracement in here. So I was able to know from that point to label here as wave 4. And all we're simply doing is waiting now for wave 5 to finish off. And again, we can use our channeling guidelines. And that if this is wave 4, we're looking now for wave 5. And we're simply looking for wave 5 to finish off down here. If the market continues to decline, we can target using from wave 1. And ideally, that's what we're really looking at, for the overall price to decline into about 152, right? So that's ultimately what we are anticipating here for EuroCAD. On the higher time frame, we're able to see a little bit more to say that out of this move here, we would actually be looking at the first wave down, right? And looking for 5 waves. So ideally, our overall target is for this market to move down to about $1.50, right? What are the confirmations that we used? Is wave B rallied to about 61.8% of wave A. That's this move from this point here to here. And that followed the guidelines of Elliott wave principles. Wave C projects to the length of wave A, right? And that is also staying within the corrective channel. So when we do a projection of where the market should unfold from here to here, when we did the projection, we found that we are down in these areas as well, right? So that's simply what we are looking at for EuroCAD. The market is still bearish. We're still active, right? And all we'd simply do at this stage is to move our stop loss a little lower. And this is now to secure profit. So we can put our stop loss right here. And this is so that we are able to secure profits from that trade. All right, we are still monitoring this price action as we progress. would have been able to take some profits out of this trade too. And we're just simply in a risk-free trade and watching the market progresses. Finally, we're looking at Euro NZD. And this too is also progressing very nicely. Right, we got a lot of movement out of the market yesterday, right? Because at 8 o'clock yesterday, we were up in these areas. We were seeing the market retracing. And I said to you that we did in fact get the confirmation level where price broke below to give us confirmation to sell. And all we did at that stage, once we got that confirmation, we simply highlighted this level here as our target point. And once we're able to highlight this level as our target point, we were simply looking now for price to continue its overall decline. Just a second, guys. Right, so at this stage here, we're looking now at wave 1 extending. So in this situation, we have a wave 1 extension in the market based on Elliott wave analysis, where we have a 5-wave move down, 1, 2, 3, wave 4 unfolded in a triangular pattern, and I'll just label that for you. Where we have A, B, C, D, E. Now in wave E, the market also created another triangular pattern to give you A, B, C, D, E. So we got another triangular pattern in there as well. Now out of there, price pushed down to give you wave 1, market retrace to give you wave 2. We now have what? 1, 2, 3, 4, 5. Wave 5 unfolding to give you 3. The market retracement out of this, and we can just simply take up Fibonacci levels from that as well. And look, wave 4 retraced into the 23.6% zone. And all we're simply doing is looking now for wave 5 to finish off. And that overall structure, we're potentially looking at wave 3 extending. So from here, as this is just wave 1 down, this is wave 2. We're looking now for wave 3 to become an extension. So ideally, what we would want to be seen, or what we want to see, something like this unfolding. Right? That's ideally what we would want to see. But first, our first target point is actually at the 1.618 extension level. And from there, we'd simply monitor this overall price action to see how we are. So we are still bearish out of this trade. What I would suggest, if you guys are active in this trade with me, is to start looking to take some profits out of the trade now, so that you're able to secure yourself and to continue in a risk-free position. So you can take some profits here. We're still not moving our stop loss level as yet, right? We're still keeping things the way they are because we are potentially in for a long ride down. All right, so until the market gives us any form of invalidation, then we can look otherwise. But for now, we're still in to potentially target the 162 zone. So it's ultimately for us now to monitor this price action as the market declines. But we are in a bearish environment for Euro NZD. And until the market invalidates our overall structure, then we would not be looking to change that otherwise. Right, so let me know. This concludes my overall analysis and all the trades that I would be looking at. So if you guys have something that you would want me to look at, you can drop them in the comment section now. and we can do that. All right, so just to recap, we have pretty much the entire market looking bearish coming into this week. Dollar yen, we're getting some retracement in. Dollar yen still looks bearish. And just observing to see exactly how this market would actually play out. All right, so that's it for today in terms of my overall market analysis and forecast. I will monitor these positions and I will share them with you guys in the trading room as the day progresses. And we'll just see exactly how these pan out. Let's see if there's any questions coming in from YouTube. Okay, no, that's it. All right, so enjoy the rest of your morning, guys.